Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. We know retail isn't the only sector making headlines in the past week. The auto industry is revving up as well, with plenty of storylines there, including a big one this morning. Well, Pras Subramanian, a senior autos reporter for Yahoo Finance, joins me now in studio. Pras, great to have you.
Thank you for having me.
Let's talk about Tesla. That's a stock ripping this morning on the back of the expectation that we might see a rollback in the full self-driving parameters out of Washington. What can you tell us?
Yeah, Elon Musk's big bet on Trump sort of paying off again for him now. There's reporting out of Bloomberg that they might actually take that framework and advance it to allow to make it more easier to get full self-driving robo-taxis on the road. One of the biggest roadblocks is the fact that the government does not allow cars without steering wheels or brake pedals or any kind of pedals to be on the road. If they are allowed, it's basically a very minimal rollout. The thinking is, or the reporting is, that they might actually loosen that and allow for more of these like cyber cab type vehicles out of the road to be testing for robotaxi.
What does this mean for the EV space in general? Of course, Tesla is unique because it has its hands in self-driving, but also electric vehicles as well.
A lot of the robo-taxis and autonomous vehicles are EVs themselves. It just makes it easier to have sort of electric motor, electric brain, that sort of thing. This powered by batteries, you don't have to actually go to a gas station to fill up. You can just pull up somewhere and charge. So it's big for EVs, big for robo-taxis, big for Tesla, which is, a big part of that trade. A big part of that investment is what is the value of Tesla's future earnings, and that's mostly tied to self-driving and other services like that.
Interesting. Now, I want to talk big picture about what changes in Washington mean for the auto space, certainly for the EV companies, but the legacy automakers as well.
Yeah, one of the biggest concerns right now is the fact that Trump has said he's not the biggest EV fan. And there's talk that the administration might roll back some of the EV tax credits, the big $7,500 tax credit for purchases and leases. This is huge for Ford, huge for GM, and it was huge for Tesla back then, it still is. But Tesla and Musk says that, we don't need that. We've gotten past that. People know what EVs are. They know that they're an attractive purchase. And Tesla, because they can make their EVs cheaper than anyone else, they're actually saying, get rid of the tax credit. It's fine. It's fine. GM and Ford will suffer, and the other automakers will, but we'll be okay. Now, I'm not so sure if that's so true, because that impacts their margins. And a big bet on Tesla, of course, is their margins, one of the leading in the industry. So if you roll back that tax credit, that then impacts their costs. So we'll see what that means for them. But Elon is saying right now, it's fine, get rid of it, it'll help us.
So tariffs obviously are a bit in the weeds, Pras, but are you expecting that would have an impact on the auto space too?
Oh, most definitely. In particular, the German luxury car makers, the BMWs, Mercedes, Audis of the world, they might get hit pretty hard with a tariff, right? That might affect them. And then also, you have some American vehicles, believe it or not. The Lincoln Nautilus is one of them, built in China. That car, if that's imported in, will have probably a huge tariff. Polestar as well, they actually make their vehicles in China. So that's a big problem for some of these European automakers and some U.S. automakers that might build some cars in China.
Interesting. You also follow the bells and whistles. So we talked about all the economics, Pras, which are very important. Obviously, we're here at the stock exchange. The market is open for trade. What cool new technology, make and models are you seeing in the auto space?
I got to say, off the top of my head, the re-release, the renewed Tesla Model 3, refreshed this year, getting rave reviews. And that's sort of potentially, we might see that actually boost sales for Tesla in Q4. I think it rolled out in the middle of Q3. So Q4 might get a boost from this new Model 3, which is sort of seeing sales tail off because it was so long in the tooth. I think there might be some potential for, EV pickups, right? We're seeing a lot of big deals here for the Ford F-150 Lightning and the Mach-E, end-of-year deals. This is one of the biggest problems, Kristen, is the fact that we're seeing a lot of these automakers have to include higher incentives to move a lot of inventory. And a lot of that's EVs.
So we had seen in the data out last week, certainly retail sales on Friday and the consumer inflation report on Wednesday, indicating that the price of vehicles did rise, that there is still sticky inflation overall. Can you talk to me about what that might portend in terms of where prices are heading in the industry?
So last month we saw that used car prices ticked up a little bit month over month. New car prices stayed flat. But the overall trend has been a steady decrease in those prices. One of the big things is because of the fact there was oversupply of these cars. Like I mentioned, Ford and Stellantis were the biggest culprits of that, overproducing cars, especially new cars. But I think that might have passed, and now we're back to a more steady state here where you might see the incentives kind of coming down a bit. fleets sort of normalizing. And for the consumer, that might mean better prices now. I'm not so sure next year, but potentially right now might be a good time to buy a car.
Interesting. And in terms of holiday sales, any projections there that you can share with us, Pras?
You know, you always see that end of year Toyota-thon, all those funny things, right?
That's
end
right.
End of year sales. So obviously the automakers count on that heavily. And one of the big things that we might see is, in particular, like I said, Stellantis, a heavy amount of Jeeps on their lots. Jeeps, those cars, very popular amongst their buyers. They overbuilt them. So you might get a good deal there with regards to Jeep and companies like that. Toyota, Honda, they tend to manage their fleets a bit better. Maybe not so many good deals, but I think Ford and Stellantis are your best bets.
Is CES a big moment for these automakers, some of the newer ones as well, to debut some of their new technology and test it in the market?
Yeah, definitely. A couple years ago, the BMW CEO was the keynote speaker there. So we might see some interesting tech there, some newer vehicles. We saw this Sony partnered with Honda to make a car. They debuted that at CES. So potentially maybe a little surprise there with regards to device makers and electronics companies who go into automotive. I'm talking about Xiaomi, the Chinese company. Their new car sold, I think, they're on track to sell over 130,000 EVs in China from a company that makes cell phones.
Yes.
So that might be the future here.
Okay, interesting. And that is happening at the beginning of January.
Correct, yeah.
One other quick question, Pras, in just about 30 seconds. We've seen interest rates remain elevated in the market, even as the Fed is still on path to cut rates, at least by market expectations in December. Is that impacting auto loans and thus demand?
Yes, 100%. It is making people less potentially interested in taking on that high monthly payment for a car. What's happening is they might actually forego the sale altogether or actually get a cheaper car. And GM has said that in the past, that they've seen their customers sort of trade down into a lesser vehicle because they can't afford a higher interest payment because of that high financing payment.
Pras, always good to connect with you here in studio. We appreciate your time and coming to the stock exchange.
Thanks again, appreciate it.